The euro hit a 9-year trough on Wednesday as collapsing oil prices and worries about the world economy drove skittish investors into the arms of safe haven sovereign debt. From Japan to Germany to Australia, government borrowing costs fell to all-time lows as oil fell 10% in just 2 days. Brent crude broke below the psychological $50 barrier, as investors wrestled with the risk of global deflation. European stocks opened higher, after Asia just about managed to hold up in positive territory, but nervousness ran deep through all financial markets ahead of Eurozone inflation data due later Wednesday. The figures are expected to show the first annual fall in consumer prices since 2009, piling pressure on the European Central Bank to launch all-out quantitative easing at its next policy meeting on January 22. But despite the growing threat of deflation, the ECB may be reluctant to act before Greece's general election on January 25. A vote which some observers say could hasten the country's exit from the Eurozone if the left-wing Syriza party wins. Given the fact that Greece will not have an official government in place at that time, the ECB may have to wait, said Marshall Gittler, head of global FX strategy at IronFX. The euro has not been able to sustain any rallies this year and so looks chronically weak, he said. The euro fell as low as $1.1842 in anticipation of more money printing by the ECB. In early European trading, it was down slightly from the previous day around $1.1870. The dollar fared better, bouncing to 119.15 yen from a low of 118.04 touched on Tuesday.